So welcome to today's class. We are going to go through lesson 2. How do you trade Forex? This is what you're going to go through. And we have the subtopics there. We are going to check how to make money trading Forex, know when to buy or sell a currency pair, what is a pip in Forex, what is a lot in Forex, what is a spread in Forex trading. We're going to go through some Forex lingo, types of Forex orders. Then you're going to look at demo trading, your way to success. I remember yesterday asking you, have you been consistent with a demo account? And you told me, no, you are using it from time to time, depending on what purpose you wanted it to serve. I'm going to teach you how to demo trade the right way. Then can you get rich by trading Forex? We're going to explore that. It's not a big lesson, but we're just going to go there. But before we look into that, I want us to go to the assignment that you had. We'll just look into them. Just a moment. Okay. So we have the assignment here. I'm just going to peruse through. Thank you for turning it in. So let's look at the first one here. We had the Forex exchange market is a global market that allows you to trade one currency pair against another currency pair. I want you to read that, us to read that question slowly again for you to see where the catch was. It was actually a trick question. It was false. The statement was false, but there was some truth in it. Okay? Mm-hmm. The Forex exchange market is a global market. Up to that point, that is true. It's a global decentralized market that allows you to trade. That is true. But what was untrue is one currency pair against another currency pair. The pair was what was making this statement false. Okay. It allows you to trade one pair, one currency against another currency. Okay.
Yeah.
Yes. So it was more of a trick question, but I just wanted us to go right through it and see where. So the correct answer was the Forex is a global decentralized market that allows you to trade two currencies against each other. If you think one currency will be stronger versus the other, and you end up correct, then you can make a profit. So that was the right answer. We're going to go through the other one. This question here, what does CME stands for? Okay.
Yeah, it's number 1. I missed that spelling. I don't know why.
It's all right.
Yeah.
It's okay. So the Chicago Mercantile, often called the Chicago Match or the Match, is an American financial and commodity derivative exchange based in Chicago. So just for clarification, okay? Small errors in the market are very detrimental. You miss something in the market because of a spelling or because of a rush, then it can be detrimental to your profit. So I want you to have every experience of what we do. I'm not even more interested in you getting everything or being right all the time. No, I'm never right all the time in the market. I just showed you an area where in the market I was wrong for my first trade. I took my second trade, and then I still closed at 1% up today in the morning. So being wrong is not a problem. Is if you are wrong, why were you wrong? Were you wrong because you didn't actually know, or were you wrong because you were actually in a hurry to do something and you missed something? That's the point, okay? Yeah. Then we had another one here. This one was actually, I wouldn't say I laughed when I was marking, but I'll just be honest. I laughed when I was marking.
I didn't really expect, yeah.
Yeah, because this one was actually outright, okay? The dollar is king in the Forex market. Why? Yeah. There are 3 reasons. Because it's one half of every major currency pair. So it comprises. So every major comprises 75% of all trades. So we can see that. So the only thing here was this circular sentence. Yeah, there. Okay. Then this. Let me tell you. You see what this number 12? Most of my students have failed it. Not just you. And
Okay,
I wanted to see, most of my students have failed this question. What is the second most traded currency?
My thinking is, okay, the first one might be US because of the way big it is.
Yes.
JPY and GBP should be almost on the same level. Euro is not really that seen. I don't know. My thinking.
Okay, it's a thinking, but now we are looking at statistics. You see, everything I'm teaching you is put down in statistics, okay? Now, which is the highest traded currency pair? Tell me, currency pair, not currency pair.
The highest traded.
Yeah, traded currency pair.
USD.
What currency pair?
Okay.
The pair.
Remember the pair, right? You told me to put GBP and then USD. USD should be the second, right?
No. What I taught yesterday was that the highest traded currency pair is Euro USD. That is the pair. Euro USD. Yes.
Really?
It is the highest traded currency pair, yeah? So out of that, you can see that the two highest traded currencies individually are the Euro and the USD. USD being the highest traded currency, okay? Because it makes up all the major currency pairs. Now, let's go to the facts. The dollar is the most traded currency, taking up 85% of all transactions. We looked at that yesterday. The euro share is the second at 39.1, while that of the yen, GBP is actually fourth. It's not even the third. Okay? Then the yen is the third at 19%. It's good to know because you know where the money is. Okay? Yeah.
Okay.
So at least you had that. So I think those were okay. That's only what you need. It's commendable. And
this one number, what's the name? 15?
Yeah.
I don't know about, I'm still very green about ETF and options and futures. I don't know the difference. I'm learning. Actually today I was even reading about it, but I still don't get the difference.
Okay, I'm going to explain it to you as we move on. So currency. So we want to know option. ETF.
Yeah, because I see some people are trading option, they're trading futures, but I don't understand.
But yesterday, I don't know if you can remember in the class, but yeah, I will still echo it. It is still in our in the recorded class.
Yeah, it is.
Yeah.
I even read today, but still I don't get.
Okay, we will go through each and every one of them in their own subtopics. Okay, options, ETFs, and futures, and also Forex. So what we are mostly trading right now and looking into mostly is Forex. Okay. Where we are looking at, we said we are looking at CFDs, contracts for differences, where you don't own whatever asset you are purchasing, but what you do is that you enter into a contract that I want to buy this at this price, and when it gets to a certain price, I'm going to relinquish either in profit or I'm going to relinquish in losses. So what we are doing right now, we want to measure for mostly on CFDs and brokers that offer CFDs. Okay. When we get into ETFs and futures and options, we are going to look at them when we are getting into the funded account stages so that you understand them practically, what they do and what is their purpose. For now, we are going to look at the definitions, not mostly into the matter of what they are all about, but their functionality are similar. It only depends on which platform is offering them. Okay. For instance, you can find MT5, MT4, and TradingView and the like. They will offer you the Forex trading CFDs. But when you go to places like in the US jurisdiction, they don't allow traders to trade speculatively through CFDs. They only allow futures trading, okay, where you're getting quotes directly from the exchange market. They are not altered. For us, we get altered prices, and I will show you how that works. Okay? Is that fine?
Yeah.
Yes. So today we just want to learn some few things. We want to learn how to make money trading Forex. I know you might have an idea of how to make money trading Forex. and it will come to reality soon where you do it and pass the funded accounts. You will know when to buy or sell a currency pair. You want to learn what is a PIP in Forex. And these things seem very simple sometimes, but I find it when we go to the charts, many traders don't really understand what they mean and how they impact their trading. We're also going to see what is a lot in Forex. What is a spread in Forex? And I will give examples in the notes and out of the notes. We look at the Forex lingo, type of Forex orders, where we'll have pending orders, market orders, and so on and so forth. We're going to look at demo trading, and can you get rich by Forex? Okay. So let us start. How to make money in Forex trading or trading the Forex industry. Now, when we're talking about the Forex exchange, where we see the banks are transacting, because generally that is what banks are doing. They are transacting. And we want to speculate. Mariana wants to speculate XAUSD, Keka, maybe US30, USD, and so on. That is how we get our interaction or first interaction with the markets. Okay. Now, what we do, and it's something that you have experienced, but maybe you have not thought about it deeply, because when you're introduced first in the market and somebody gives you a trading platform or a chatting platform where they tell you, analyze this, how we analyze this, how we do this, but they don't give you the behind the scenes of what mostly happens when you are transacting. Is it buying or selling? Am I making some money when somebody else loses some money on the other side? And so on and so forth. What we find is that the mechanics of the trading are similar, like the ones found in the stock market. You see, we normally see that many traders, or in the earlier days, or even in the country, people who have little money, they don't even interact with the Forex market as such. What they normally do is that they will interact mostly buying stocks. Especially if you listen to some old guys who have some money, you'll hear, I have some stocks in Safaricom, I have some shares in Equity Bank, I have some shares wherever. So what they do is that they actually buy a piece of that company. When you buy a share, you're buying a piece of that company. Same when you come to the Forex market. You're just buying a piece of that currency, but electronically. Okay? So when we are looking into that, let's now get into understanding what a PIP is in the market. Okay? So, okay, so sorry, let's continue with when to buy or sell a currency pair before you get into PIPs. I don't know, when we were talking with you yesterday, you told me that the currencies you've interacted with, and I was shocked you never mentioned the country which you live in. You talked about GBP and USD, but you never told me you do a lot of exchange.
Yeah, but
in your own, in the country where you're working, okay? And assuming you have relatives in Kenya, I know you send a lot of money back here, back home, okay, to run maybe some of the businesses you have here, because you told me you have some businesses here. So now, when we get into the market, we are not actually sending or transacting these exchanges the way we do when we are sending money back home. What we are doing is that you get to a platform. I will go into TradingView just to give an example. And what I'm going to do, I will go to one of the currency pairs that we commonly, the highest traded currency pair, which is Euro USD. Now, once we look at this currency pair, we can clearly see that this market is actually trending downwards. This is Euro USD. So when we're talking about buying and how you make money, basically is if I bought at this amount right here, let me give an example. That is the price of 1.07730. I will speculate. Speculating means that I did not see this. We can see this in hindsight right now. But I did not see this, but when I did my analysis, I anticipated that price is going to draw lower. And I'm going to see some patterns making like a downtrend in this case. And when price gets to that point, I will going to book some profits. That is if I close them. So what happens is this, that you will sell at this area. People normally think that this is not a transaction, but when you sell here, the only way you are going to relinquish your sale is buying back what you sold here at maybe 107.07251. So what does this mean? So for instance, I will execute my short position at that price level. I will have my stop loss or my protection above that level. And I am anticipating that when price gets to this level down here, I am going to make a profit. So how do you make all these profits in these moves? So I want us to go into the mechanics of what is it that happens? Because there are lots, there are pips. What is this difference that you find here of these quoted prices? The quoted prices of 1.07730 and the quoted price of 1.07282. What are these? How do we measure these pips? So let's go back to our lesson. So when we go to our lesson, let's understand what is a pip. Okay? So a pip, PIP, or points or pipettes and lots are words which you will hear constantly. And you're going to use them every single day in your trading. It doesn't matter how whatever you are trading, doesn't matter if you're trading currency pairs, doesn't matter if you're trading stocks, doesn't matter if you're trading indices or Bitcoin or cryptocurrencies, you're going to interact with a pip or a point or a pipette. And I'm going to show you how they actually are in the market. Okay? Sorry, there's some lag with the internet, sorry.
No
Yeah,
problem.
there's some lag with the internet.
You should move from Kenya.
I'm not going to move from here. I have options to move, but I love this country.
No, I don't love Kenya.
No, I love this country. I know we have problems, but I love my country. Okay,
yeah.
So let's go through a pip. Now, for instance, we were on the chart checking Euro USD, and I'm going to use Euro USD a lot of times. And as much as you love gold, I will still push you to go into Euro USD for a period, because Euro USD will help you see patterns slowly. Gold moves very fast. And as you're starting, I will have you interact with it for maybe a week or two, and then you jump into what you love. So let's look at Euro USD. So if Euro USD moves from 1.050 to 1.1051, that's a rise of whatever is quoted on the screen. That's a rise of 1 pip. You can see 1 pip right here. Now, that's 50 to 51, 1 pip. A pip is usually the last decimal place of a price quote. Now, there's something I want to show you on the chart, because I want to engrave this on your mind. Yes, it's the last decimal place on the price quote, but up to how many decimal places? Let's go to the chart, and it's something you're going to realize. If you look at this decimal, 1, 2, 3, 4, 5, we have 5 decimal places on this specific quote. Okay? So this means that you will ignore the 5th decimal place. So if you're talking about pips, for instance, 1.07773, 73, that's the number you're going to use as a pip in this currency pair Euro USD. The last one on this broker called Pepperstone, they have added another extra 0. That's what we call a pipette. So as the decimals increase, it comes from a pip to a pipette, and then I will tell you what it means by points. Okay, so we look at the last decimal places. So Euro USD 1.1051. This is the last one, which you call a pip. Okay, what is a pipette? A pipette, it's quoting it in fractional pips. Now, instead of 1, you will see some other numbers or some other numbers after the 4th decimal place, because the 4th decimal place is the standard. For instance, when you go to GBP USD, now, if it moves from 1.30542 to 1.30543, this is a change. So you can see this is a pipette. A pipette is as you go deeper into the decimals. So the first 4 That's a pip. That's what you calculate. When we go to the other decimal place, that's what we call a pipette. Okay? I hope we are clear on that. Right? So what you look at, when you look at this area here, or what the image you see on your screen, this is the image you will see mostly on your trading platforms at the topmost corner, right here, at the topmost corner. It normally, when you are executing, sorry. So for instance, let me go to one of this. So you're mostly going to see something like this here. So this is what you will always see in the trading platforms. So this quoted price here, for instance, 19,037 in NAS and 19,038. This is what you will normally see. So when we are looking into this image, those are what you see. So these numbers are what are called fractional pips around that area. Okay, so you can see one, this is 10,000 pips here in currency pairs. 1, 1,000 over pips, 5, 500 pips, 3, 30 pips, 8 pips, 0.2 pips or pipette. Okay, that is what we see. So when you are calculating value of a pip, and these are things that we are not going to be calculating. That's what I was telling you. When I am teaching you all these things, I don't want you to go calculate all this. There's something I want to show you on my screen where instead of doing all this, I use a calculator. Okay? Look at here. This is what I use to do my calculation. I normally, before I enter a trade, if I want to sell here and execute on this market here, I will just click on this long, and I want to risk 1% of my account. The risk is 502, including spreads, of course, right? And then it tells me what lot size in this broker am I supposed to use when I'm trading NAS 100. And at this instant, if I was to execute a short, okay, this is with my stop loss above here, or maybe I put my stop loss there and I put my take profit down here, targeting this lows. This market clearly tells me I can use 25 pips, okay, to make this reward. I will put my take profit there. If I want to add more take profit levels, I can add more take profit levels on my way down. So we don't normally calculate that, but it is good to understand how these numbers function in case you don't have a calculator, what you will do. But in this instance, I will let you go through that topic. We are not going to delve into how we are going to calculate them. It is not of value to you at the moment, but the information is actually there. So let's go to the next subsection of what is a lot in Forex. Now, when you talk about lots, this is where risk management comes in. This is a topic that most people normally jump because it has so much into it. People don't like anything to do with risk management. When I am managing my risk, I have realized that I'm a very good trader, but the moment I remove risk management from my trading, I become a very poor trader. Okay, and I will show you examples as we move along. So a lot is a unit measuring a transactional amount. Okay, so when you're talking about lots, we have standard size of a lot, which is 100,000 units of a currency. Okay, and there is also a mini, a micro, a nano lot, and all that. That's when you go to a market. I'll go back to my trading view. When you're coming to execute, maybe you want to execute the market and you want a new order, maybe F9, new order there. For instance, when you're looking at this and you want to actually execute a lot, when you see something called a volume here, this is what depicts the lot sizing in the market. Many people don't even understand how these 15 lots, 10 lots, how they are relevant into how much you are to lose in the market. And that's where lot sizing comes from. Okay, so when you're looking at lots and numbers of units, when you're looking at standard unit, we're talking about 100,000 units when you're talking about a standard size or a standard lot. Talking about a mini lot, 10,000. A micro, 1,000, a nano 100. Okay, so some brokers will show quantity in lots, and other brokers will show the actual currency in units. You will interact this mostly in trading view, but most of what we see in MT4, they use lot sizes, not units. Okay, so the change in currency relative to another is measured in pips. So we saw that in trading view, that if we move from 1.0773 to 1.07249, this change, and we are going to measure it from this high to this low. Down here, you can see some numbers. This is 47 pips, or approximately 48 pips from this level to this level. This move is 48 pips. So you can see that's the unit of measure. The market moves in pips or pipettes or in points. When you go to NAS 100 US30, we talk about points. We don't talk about pips, and I will explain that further as we move along. Okay, so that is what we see. So if you're talking about Euro USD, if you're talking about any closing price, it is any. We can see that the unit is 0.01. A standard lot of 0.001 is 10. A mini lot, this is a value per lot. If you put one lot in Euro USD, one, it means 1 pip will cost you $10. Okay, let's go back to this example here. It is standard. It is how it is. So I will clear the chart and remove the drawings. So let me give you an example. So if we have a short position at that specific level there, we have our stop loss above that price, and we're targeting maybe 1:2.5 risk to reward ratio. So what happens is this: between this level, where I'm going to draw the line there, and this level above here, if I was to measure it for you in pips, we would measure this as 11 pips. Okay, so if you enter this market with one lot here, it means that you will calculate one lot is 10 USD. Okay, when you have 10 USD per every pip that moves. So the risk that you will have here is 11.5 times 10. Okay, that will be your risk when you are trading that market. So no wonder many people, when they enter and they put 10 lots, the market moves very little, and they wipe their account off, because they had not thought of what is the value per pip that I'm entering. So when I enter with one lot, that's why accounts are blown. Why? Because some people, when they enter the market, instead of putting one lot to lose 11.5 times 10, which is 115 USD. I want to show you practically what that means. That is 115 USD loss, unrealized loss. And from this level to this area here, we have 30. So it will be 30 multiplied by 10. That is 300. So that is what a risk to reward ratio of approximately 1:3 or 1:2 would look like. Now, when you put one lot in Euro USD, value per pip, when you put one lot in any platform, we're talking about Euro USD, is $10 per pip. So in this scenario, when you put a stop loss of around 11 pips, you are risking $115. And when you want to achieve at least 30 or something pips, you're going to make $300. So this is how pips and lot sizes affect your trading on the charts. Okay, so let's continue. I hope that is clear. If it is not clear, just let me know it is not clear. All right, are we clear up to that point?
No. So let me ask you, you use the ruler to calculate, right?
To do what?
To calculate. So you see it is 11, because here kwanza ulisema 10, and I was thinking, where is the 10? The first,
let
the first one.
Let me zoom in a bit for us to be clear on this topic, because this topic is a topic that and the whole topic, just for you to understand. I wanted to look at this measuring tool. This is measuring tool.
Where?
The one that I
see
put here. This one is the gray area and this red area.
Oh, yeah, yeah.
Okay. Now I want to put all the price points. We have this price point here, the entry. I'm going to make it a bit bold for you to see it well. Just a moment. Apply defaults there. It's the blue line.
Yeah.
And this is the blue line here. Defaults. And then I'm going to apply defaults on this other line just to show you practically what it is. Okay. Now, this blue line here depicts where you would have placed your stop loss. Okay.
Yeah.
This other blue line here is your entry. Let me just write them down for you here for reference purposes. So you have your entry. Okay. There. You have your stop loss level. Your stop loss level. And you have your take profit level here. I wanted just to mark them out. So with your stop loss level, your entry level, and take profit level, let's assume you wanted to catch this move to the downside. And you had your entry level here. And you had an account where you could lose 1%. So for instance, I will use the account which you have. You have an account of 100,000. Isn't that right?
Yeah.
Yes. That is the account that you are looking to pass. So with 100,000 USD account, it means if you want to lose to risk 1% here, okay, you'll risk $1,000. Isn't that right?
Yeah.
So a risk is 1,000 USD, okay, which is 1%. There, right? So that means that this stop loss needs to accommodate 1,001%, okay, which is 1%. So in this sense, if we were to risk this and you wanted to put lot sizes, how many lot sizes would you put here to allow you to lose 1,000? If one lot is $10, are you getting my point?
Yeah.
One lot is $10. What will be 1,000? Na kurudisha kwa ile mahesabu ya primary. Okay? If one lot is equals to 10, how much would I need to risk 1,000 here? So it will be one lot, which is 10. So it will be 1,000 times 1 divided by 10. Okay? Yes. So that will be 1,000 divided by 10. So that means that you will risk not one lot, you will risk 100 lots. Okay?
Yeah.
That is what I'm trying to get to you to understand, for you to risk one. But the example that we had here is if this one lot equals to $10, this standard unit, that means if I have a stop loss of 11.5 pips, I will have to risk just one to lose 115 USD. Is that clear now? Clearer now?
Yeah.
The same way, you'd risk 1,000 lots where you'd risk $1,000 on that level if you have 100,000 account. This is for someone who maybe has $10,000 account, where they're risking 100 to 120 or 150 USD per every move they enter. Okay, that means if you're risking 1,000 on this risk to reward ratio, you are going to make 3,000 USD on that move to the downside. That is what happens. Okay, so you have your risk here. You put one lot for an account of this account, but for this one here, how many lots? We are going to see that if you are to risk one lot is to 10, it means that we are risking 100. But now since we have 11 stop loss, we are going to do 100 divided by 11.5. That means that you're going to use 8.6 lot size here, 0.6 lot size for you to lose 1,000 USD. Are we clear there?
Yeah.
Or do you want me to repeat it?
No, I'm good now.
You're good
I
now,
get
eh?
it.
Yes.
Yeah.
Good. So let's go back to the notes. Now, you have had leverage. I don't know what leverage you're using in your account or what leverage they have given you to use. But mostly, funded accounts will give you 1:30 or 1:100. Is it that true?
So when you say 1:30, you mean 1:3?
No. We're talking about now leverage. We are out of the lot size now. We are on leverage. When you go to a broker like Pepperstone or I don't know which other broker, you told me you're using Xness.
Yeah.
Xness are very notorious because when you go to their website, they want to give you 1:2,000. Isn't that right?
Oh, I understand what you mean.
Yes.
Okay, leverage.
Leverage.
Unlimited.
Yes. When you are going, leverage is like a loan. Let me just use layman term. Leverage is just like a loan. Okay? It just means that Mariana wants to trade Forex, but in her account, she has $1,000. Okay? But $1,000 is not going to allow Mariana to execute effectively in the market. Right? So how can I allow Mariana to trade in this market with little money or with funds that are inadequate to execute positions in the market? What happens is I'm going to allow Mariana leverage. I'm going to loan Mariana 1,000 multiplied by the size of leverage I'm willing to give her. And I will give you an example. Okay? So let me go back. Sorry. Good. All right. So I'm going to give you an example on the chart. So let's go back to the chart. Let me clear the chart. Okay. So Mariana came with 1,000 USD. Let me put it here. So that means that you came with 1,000 USD. So for me to allow you to trade bigger size than 100, let me change this text to a more clearer color, 1,000. So 1,000 USD, then I'm going to allow you a leverage of 1 or 500. This is what most of the brokers give you. That means Mariana can control a position in the market of up to 500,000 USD. That is in simple terms. Okay?
Yeah.
Umeelewa vizuri?
Nimeelewa, lakini I'm still wondering.
Yes.
When I'm trading, right?
Yes.
I had this account that is 1:1 limited.
Yes.
But I didn't understand.
Yes.
Because see come crypto, because when you take let's say a margin or maybe a leverage, they show it there, right?
Yes.
And you're able to understand. I have 100 and I take maybe times 20x, right?
Yes.
So you know that is like 2,000. But in Forex, they don't tell you.
Now, what happens is this. Crypto is one of the emerging markets, okay? Number one, I will let you know that in crypto, they don't even give you more than 1:5 leverage. Do you know that? Have you ever tried to execute crypto and the account tells you do not have enough money?
Okay, for me, I use 20x or maybe 30, depending on the coin I'm trading.
And I don't know, now to be clear, are we talking about personal account or are we talking about funded account?
Okay, in crypto, me, I don't use funded account. I have never seen.
Okay.
Because I use like a platform like Binance or Bybit.
Yes.
Yeah, I've never traded Bitcoin with Forex broker.
Okay, now I want you to separate the two. Separate Binance and Bybit from trading for a bit. Why am I saying that? When you come to the Forex execution platforms, they are very different from the exchange platforms. When you talk about Bybit and you talk about Binance, those are exchange platforms. Okay? Exchanges. They are live exchanges. Okay? They are banks. They are crypto banks. I will call them what they are. They are crypto banks that are online. Okay? When we come into the Forex or the execution industry, this is a very different industry when you're talking about leverage. Okay? They hardly give you leverage in those accounts or in those Bybits and Binance. Okay? When you are in Bybit and Binance, you are actually transacting real hard cash. But when we come into Forex and crypto in CFDs or contract for differences, where we are offered in TradingView and MT4 and other platforms, we are talking about speculation. In speculation, you don't own. But in exchanges, you own the product. For instance, if you go to your Bybit or your Binance, you have money there. Isn't that true? So you own that amount. You own that amount. Okay? But when you come into trading, you don't own this amount. You don't own the leverage that you're given. That leverage is just accorded to you for the period where you are trading or executing. Otherwise, when you look at your account, when you close your P&L only reads the amount that you have or you deposited. For instance, if you deposit $1,000 in your Xness account, you will never see the leverage that they are giving you. It is not there. But when you're looking at the margin and the margin levels, you can see how much you're controlling. Are we in order?
No. For me, I have never seen how much I'm controlling. If I have like an example right now.
I will show you when we go to. Let me give you an example. When you go to your account and when they come back and they are your Xness, when you are registering for Xness, don't you go to their website?
Yeah, I use 1:1. 1:1 limited.
1:1 limited. Isn't that right?
Yeah.
So if you're using 1:1 limited, it means they can take away your money very fast. Very, very fast. In a flash. Why am I saying that? Why would you do an unlimited type of a leverage? That's the most riskiest decision and the most expensive decision you made when you are registering your account. Because that is what they normally advertise to us. That you take the biggest leverage. 1:500, 1:1000. What you are doing, you are increasing your risk potential. Because leverage is a double-edged sword. That yes, I am allowing you to control a certain amount of money, but if you lose, I am going to take away all your money in a flash. That is just basically what you just allowed Xness to do. So if you deposit $1,000, the maximum I would allow you to do is 1:400. Nothing more than that. Okay? Because what unlimited means, it means you can put in even a 10 lot size in $1,000 account, meaning within 1 second of a movement or a price fluctuation. Let's go back to the chart. I show you what a detrimental effect you have in your account. I'm going to mark in here that if you have $1,000, you took it at a leverage of unlimited.
Okay, so that means they're not even giving me a loan. They're just allowing me to use a bigger lot size in a small account.
Yes, yes.
So that means they're not giving me any money.
Yeah, exactly. They're not giving you any money. But they're giving you the ability to execute with a big lot size. Yani wamekuwekea bait. Sijui kama umeelewa kenye wamefanya.
Okay, yeah. So that means if you win, you win. If you lose, you lose.
If you win a lot. Crazy.
Yeah.
But if the market fluctuates a bit against your position, let me give you an example. I want to show you what this means practically on the chart. Now, We go through another different example. Let's go through a long position right here, okay? Let's say you made your judgment, you did your analysis, and you thought that the market now is going to buy from that level up to that level, okay? You have your stop loss period here. Let's just go your prices, okay? Now, you might be lucky and you enter a buy and the market does what? Shoots up immediately without going into drawdown, okay? Drawdown is between your entry and your stop loss, okay? And the market shoots up and gives you crazy profits. But if they have given you a 1:1 at unlimited leverage, it means that if you put a big lot size here and the market makes a mistake and moves against your favor a bit, it blows your account even before it gets to your stop loss.
Okay.
Now, do you know, have you seen now why a big leverage is a disadvantage in a small account?
Yes, but still, what if I have a leverage of 1:4? So how do they calculate their limited? Do they say like, so when you have an account of 1:4, that means they don't give you a higher lot size on a small account?
Yes, they will not allow you. For instance, they're only going to allow you a maximum of 10 lots in this account, not more than that. That means that you will have some few lives before you die. It means that you can maybe enter one lot, it will allow you. But if you went with just $1,000, you could not even execute one lot. You could not even execute 0.1 lot or 0.01 lot with $1,000. That's why they give you leverage.
But I saw you're opening a lot of trade at the same time.
Yes, because I have a big account that is allowing me the lot limit.
Which is 1:2?
No, it's not even about 1:2. My accounts are 1:100. But I'm trading $50,000 and $100,000 accounts.
So if it is 1:100, what is the higher lot size you can use?
The higher lot size, it depends. It depends because depending on how much I can control in the market, that means that I am controlling that amount times 100 or that amount times 30. When you go to a prop firm like FTMO, they don't give a maximum of they give a maximum of 1:30. Okay, you know, an account. So the control I have in FTMO is not the same control I have in Alpha Capital. It's not the same control I have with Pepperson, my personal broker. Okay, so depending on what I am executing, that's why I can afford to put like 10 lots 10 times, because my maximum lot size in FTMO is 100 lots for NAS 100. Okay, so for instance, now when I am using Alpha Capital, I can control more. I can put 10 lots 20 times. Okay, that means my maximum lot size is 200. But if I'm given unlimited, it means I can put in 200 lots 5 times. Do I stand to make a lot of money? Yes. Do I stand to lose a lot of money? Yes, I stand to lose a lot of money. Okay, I will suffer drawdown very fast. That's what I'm trying to mean. Okay.
Yeah.
Yes. So when you're talking about that, it means that when the broker is asking you, deposit 1,000 shillings, Mariana, $1,000 in your account, and I'm gonna give you leverage, it means that they're only asking you for something they call a margin. So what you just deposited, the money you deposited in your account, they are calling it a margin. Okay, it's not a fee.
Okay, let me ask something. So when they say 100:1 and 1:100, is it the same thing?
100:1 or 1:100. It's the same thing depending on the words that precede the 1:100. Let me give you an example. If you're talking about 100:1 or 1:1, and you're talking about leverage, it's the same thing. It's the same thing, because they're just telling you, I'm going to give you 100 for every one that you bring. Okay? And even if they interchange it when talking about leverage, it's the same thing. Some brokers are going to say 100:1, other brokers are going to say 1:100. Okay, let me give you an example. I'm talking about reward to risk ratio. It's the same thing, RR. So if I'm talking about RR and I tell you I had a 10:1, I can also tell you I had 1:10, depending on what I'm talking about. Okay, but it's the same thing. There's nothing different about it. All right. Yes. Okay. So when we were talking about profit and loss, I hope you understood when I was giving you an example in Euro USD, when you are selling or buying, maybe a place like here, calculating.
Let me ask you another thing. So you said one lot size is equals to $10, right? That's a standard
in Euro USD.
thing.
In Euro USD, yes. In most of the pairs, Euro USD, you will have GBP USD.
What about gold?
Gold is the same.
Is it not one lot one? Okay, so if I'm using a lot size of one,
Yes.
and the price was maybe 28.
Yes.
Maybe okay, sorry, 23.
Let's go to gold.
01.
Let's go to gold. Let's just go to gold, and we do it practically. You will get the, yeah. So let's go just to gold. Okay. So I'm gonna just mark in 2 levels here, and you will use them as examples. Okay, so I'm gonna use that level there, and I'm going to use that level there. So ask your question with 2305 and 2308.
Okay, so if I'm using a lot size of 1,
yes,
that means from, you say 05.
Yes.
05 to 08, that means it's more than how many pips? Let me see. Now that's another thing. I don't know how to count the pips ikishavuka decimal to the other side.
Ikuja kwa gold. Okay?
Yeah.
Yes. Good. Na tutaenda kwa gold. So gold, most of the time when you're looking at pips, you're looking at the decimal places huku mwisho, because gold inakwanga already isharuka into numbers. Gold is not 1 point. It's 2305. Yeah. Okay? So when you're doing 2305, uta minus 2305 kama inaenda hapa juu hizi pips. Let me show you. Nikutumia hii measuring tool from 2308 to 2305 inakuambia hizi hapa ni 35 pips. Okay? Hapa. So 2305, na kwa sababu natumia decimal, they use the decimal places right here. Okay? You can see this measuring tool.
Yeah.
Yes. These are 350 points. Okay? These are 35 pips when you calculate with that decimal. So let me do the example for
so
you.
You initially remove the 0 to be 35. Initially it's 350. But you just say 35.
Yeah. Kila wakati ukienda kwa hizi nini, kwa hizi when you're measuring with these accounts, they normally have a lot of decimals put. Kama Pepperstone ameweka decimals extra. Sijui kama unaelewa, wanakuwa wameweka 1 extra decimal. So kama hii hapa ni 2308.9. So that's what the 08.9. Then you will minus 2305. 2305, sorry, 05.4. Okay, so utapata 0.4. Okay, utapata ni 3.5. But for pips sake, it is, you count them as 35 pips because of the first decimal place here. This is in gold. Okay? Or you are lost?
I'm lost because when you look at the decimals, it's just 23.0, 2305, and then 2308. That is 3.
Yes, like
right? And the other side is 50 cents. That's what we mean.
50 cents. So unatumia, you use the decimal points, unarukisha. So kama ni 3, you'll put times 10. Hii decimal ni times 10 imeenda kwa decimal places. So you're going to use the decimal place on the right. Okay? So instead of saying that this is 3 pips, kama kenda kwa 1 minute, unaweza pata hiyo ni 35 points, sorry, or hapo I think kuna mahali tumenini. So when you're talking about gold, we're talking about the round numbers first, because there are 4 round numbers here. Okay? And that's what I was telling you, when we are talking about pips and pipettes and points, when you're talking about currency pairs, we talk about pips. But when you're talking about commodities, and you're talking about commodities or indices, we talk about points most of the time. Okay? Not pips. Utasikia mtu akikwambia nimetengeneza 35 pips. ama 350 pips. Kama hapa inasoma ni 350 pips. It's not 350 pips. It's 350 points. Points that the market has moved. It moves 350 points. Okay?
Okay.
That is what it has moved. But when you are measuring, when you're talking about lot sizing, you'll use this 3.50. Okay? That means from this 2308 to 2305, ukienda kama ni kwa calculator, ulizwe, how many pips is it moving? Ita calculate kwambie, those are 3.5 pips.
Okay.
Okay? Ama 35 pipettes. Ama 350 pips. So it's 3.5 pips, 35 pipettes, or 350 points.
So my question, yeah.
Yes.
So my question was, okay, so if you're selling from 2308.92 to up at 2305.44. So it is moving 35 pips, and you're using a lot size of 1, right?
Yes.
And you said one lot size is equals to $10. That means it's almost $350. You're either gaining or losing, right?
Yes, exactly.
So if I do like a lot size of 3, that means first I do 10
3
times 30.
Oh, 10 times
30.
3. 10 times 3.
Yeah. Okay, 10 times 3.
To get 30 lots?
And then, 30. No, 30 to
lots?
get $30.
Oh, 30, sorry.
Okay, 30. Just initial. $30. So since it's 35 lots.
Per pip.
Yeah.
Yes.
Per pip, yeah. So that means it's 35 times 30.
Yes, times 30. That's how much you will stand to make or lose, depending on what size of these pips is. Because if the size of the pips is within the stop loss, then you're going to lose that. That amount. Okay?
Okay.
Kama sapo ukiangalia ini 1:1.5. So if the market goes against you, you're going to lose the same amount. Yeah. So it doesn't matter. If it moves against you, you're going to lose the same amount. If it moves towards your favor, you're going to make that same amount. So
let me ask you a question. So what if I'm having a trade, right? And I want to use a lot size of 3.
Yes.
But I want to divide my trade into 3 sections because of that 1:3 thing, right?
3 sections, or you want to do 3 positions?
3 positions.
Yes.
Because I want to target my trade 1:3, and I want to put the first trade 1:1, the second trade 1:2, and then the third trade 1:3. That's how people do, right?
Yes.
Okay. Because I see like people saying they're giving signals, and then they say TP1, TP2, and TP3. So I'm like, yeah. Good. So I'm like, this is one signal. Are we supposed to enter many? I'm gonna divide this one lot size to 3. Yeah.
Good. Now I understand your questions. Now let's go to exactly what you're saying. Let's say you entered at that level and you had your stop loss there. So somebody is giving a signal, sell gold. Okay?
Yeah.
And they're telling you, first take profit is here where the blue line is. Second take profit, they tell you take it there. That take profit, they tell you take it here. Okay? Now, what they mean is this. You enter the same risk, but as it is going lower, you take away some of the profits. So for instance, using your example, you wanted to enter with 3 lots. Okay?
No, 1 lot size, but 3 position.
Good. What I'm saying is it was 3 lots total. And you want to divide them 1 lot.
Yeah.
So you'll enter 1 lot, then the first one, you are going to exit here. Second one, you are going to exit there. Third one, you're going to exit there. But this is not necessary, and I will show you why. Okay? Because the trading platforms we use, even if you entered with 1 lot of 10, maybe you entered 1 position of 10, you can still scale out of these moves. You can still scale
MT5
out.
doesn't.
Yes?
MT5 doesn't. MT5 doesn't.
It does. It does. It does.
On the phone.
Yeah, it does.
Kwa simu haifanyi.
Kwa simu inafanyanga na mimi natumianga MT4. MT5 zote mbili.
No, MT5, yeah. So when you go to MT5 and you want to close the the trade, right?
Yes.
It should give you an option to reduce the lot size.
No, it does. It gives you an option to reduce the lot size, and I will show you.
You go to modify, but it doesn't give.
No, when you go to modify, above the modification area, they normally give you the number of lot sizes you want to close. So when you say close with that total loss, you close the whole position. You could have adjusted how many lots you want to close.
Okay, unless imekuja sahi.
Yeah?
Unless imekuja recently.
Hapana, inakuanga from the day I started trading imekuwa hapo. That is
for real, I've been trying. And one of the things is I wanted to use MT5 because I know it's better. Yes. MT4 looks ugly and it doesn't please my eyes. Yes. But it was the only place that allow you close that position.
Partials.
But now, partial position. Yes. Yeah. I will try it on a demo account and see.
No, I'll show you. I'll show you as we move on. But now let's just continue. I hope now when you're talking about lot sizes, spreads, and leverage, it is clear now. Okay?
Yeah.
Now let's talk about bid and ask price. When you talk about bid and ask price, what are we talking about? When you buy a currency, you will use the offer or ask price. Okay? When you sell, you use the bid price. Now, where are the bid price and ask price quoted? If we come back to this, you can see above here. Here, you have sell and buy, okay? When you are selling, it means you are selling the market, okay? And as we have been explained to here, when you are selling, this is the bid price that you're using, okay? And when you are buying here, this is what is called the ask price, okay? Ask price means that I want to buy from someone. It means the broker has to sell to me. And selling means I'm selling to the broker and the broker has to buy from me. I'm selling to the broker and the broker has to buy from me. That is actually what it means. So when you're selling your pair or your asset to the broker. When you're buying. That means the buying amount will most likely be higher than the selling amount. Are you getting me?
Yeah.
That the two lines you normally see here, bid and ask price. That is what they mean. But if I am buying, I am being sold to. Okay? And if I am selling, somebody is buying from me. And who is buying from me? The broker. Now, the difference between this price, for instance, now we have 190.63.50 and 190.62.80. The difference between these two prices here is what is known as a spread. Spread. Hiyo ndio pesa yenye wanatengenezanga. Na unaipatanga wapi kwa MT5 yako? When you come to MT5, you view, you go to market watch. You find the list of assets there. Let me hide all these assets here. The list of assets here. You can see the spread here. Wanasema ya NAS ni 80. Sio 80. Spread hata maybe inaweza kuwa ni 0.8. Kwa sababu unaangalia the difference. 190.63 minus 190.62. Utapata hiyo ndio difference inakwanga hapa. Inakwanga 0.8 and it fluctuates depending if there are news or sometimes unapata hii kitu iko juu sana. Okay? And that's why when I'm entering trades, I normally am looking at the spreads which they are offering me at. Ukienda London session, spreads zinakuanga kubwa. Ukienda New York session, spreads zinakuanga ndogo. Ukienda during fundamentals, Xness ni mbaya huwa ana increase. But wengine wengi wana decreasing kwa sababu kuna volume kwa market. Okay? So this is where you will find all that. Okay? So any questions on bid and ask price?
No.
Iko sawa? So spread umeelewa kabisa what it means? Is the difference between the ask and spread price. Good.
Yeah.
It's actually a transactional cost. Hiyo ndio wanakulanga. Okay? Yeah. So even though wanakulanga, I have shown you in practically the bid price and the ask price and all that, and pips and all that. Okay? Yes. So what else are we looking for? Let's look at the last section. Forex lingo, all this you know. Major minor currencies, we went through that yesterday. Is that true?
Yeah, Forex what? Lingo.
Forex lingo, yani Forex language. I just want us to go through, you understand what major and minor currencies are?
Yeah.
Good. What is base currency without reading? Just tell me, what do you think a base currency is? If I told you Euro USD and I gave you an example, Euro USD, what is the base currency? What is the base of that pair?
The base.
Yeah, which is the base currency in Euro USD and which is
the base is the second currency, right?
The base is the first currency, okay? It's the basis of the
Oh.
trade. Okay, I'm just juggling. It's the basis of the fast trade. For instance, if you go to Euro USD, if you want to trade Euro USD or gold, okay, when you're taking this move here, gold will be the basis of your trade. Okay, it's the basis. It's the one that has more value on the Euro USD. So if you are buying this market, it means that you are anticipating that gold is going to gain value against the dollar. It's the basis. And if you are selling, it means you are anticipating gold is going to fall against the dollar. Okay? Yes, that's the basis. The quote currency is the one that is quoted against the base. Okay? Yes, it's the other one on the chart.
Let me ask you.
Yes.
Example, there's a fundamental news, right?
Yes.
And you're saying, this is just an example. Okay, yes. if dollar is high, maybe the previous, maybe let's say example of like NFP, right?
Yes.
Okay, so if dollar is previous was 3.5 and this time is 3.9, right? Yes. That means it's higher. That means what am I supposed to do? I'm supposed to sell. But I don't know. Am I selling USD or I'm selling dollar?
Now, what happens?
Sorry, I'm selling gold.
Gold. Now, what happens is this. When you have, okay, we have not jumped into the topic of fundamentals, but we're going to get there. But in the instance where you are asking about fundamentals, whatever value comes out, you're not making your decisions with the fundamentals. You're making your decisions with the structure in the market. The fundamentals just come as a catalyst of what the market was supposed to do. And we'll get into that. But now, when you're talking about
I just want to understand the language, what people say, because I always say gold USD is high.
Yes.
So we are selling USD, and I don't understand.
Okay, it's fine. It's fine. And as we move on, all of these things are gonna fall into place. And as much as I want to give an example using fundamentals, it might not come as outright as to make you understand what you want to understand using the fundamental example. Okay, but what I want you to grasp right now is the basis of a trade. When I'm talking about XAU USD, on this specific chart here, gold is more superior than USD. I want you to understand that.
Okay.
Yes, gold is more superior than USD. Hardly will you find this intertwined. Okay, the one that has the most value is normally the base currency, followed by the one that has less value. Okay, we are going to delve deeper into how all those mechanics are together. I don't want us to jump the gun. All right. Okay, so when you're going to PIP, we have looked at that. It's the smallest unit of price of movement of any currency or any asset. Okay, pipette is the next decimal. And if it's to remember, when it comes to currency pairs, we're talking about the fifth decimal when talking about Euro USD. That's an example. Okay, bid price, it is price at which the market is prepared to buy a specific currency pair in the Forex market. Okay, and ask is what the market is prepared to sell to you. Okay, that is what you do. So bid ask spread, it is the difference between the bid and the ask price. Quote conversion is the exchange rates in the Forex market. We have the transaction cost, okay, the cost which are that's the spread in the market, what the market is calculating, the ask minus the bid price. We have cross currency pairs. Of course, it is a currency pair in which neither currency is the US dollar. For example, Euro GBP or Euro. We have Euro GBP or GBP JPY, for instance. That's a cross currency. You have taken the major pairs and you have intertwined them there. So you might have Euro crosses, Pound crosses, so on and so forth. You have margin is the money required by your broker to be deposited. It's the minimum amount they want you to deposit in your account. And sometimes you're gonna hear when you're going to get a loss. Let me give you an example. When you had some big losses, did they send you an email in your account telling you to add margin?
Yeah.
That is what they meant. They meant, can you add some more money to be able to hold that position?
Yeah.
Because your pesa yako imeisha, so ongezea pesa ingine. So ukisikia amesema ongezea pesa ingine ni kumaanisha ongezea margin. So ukisikia mtu anakuambia ongezea margin kwa market, anakuambia just add some more money to be able to handle the positions which you have in the market before we give you something called a margin call. Okay? Then you have look at leverage. Leverage is the loan they give you. Okay? Ni ka loan tu anakupea, lakini ni ka loan hauoni. Na hutawahi kaona. Wamekwambia tu tumekupea 500 times. You can control the market 500 times. But in reality, hakuna kitu amekupea kwa sababu wewe ukilose utalose pesa yako. But uzuri wa leverage nayo, especially for people who are called hyperscalpers. Hyperscalpers is somebody anasema niko na $1,000. I want to flip it to $5,000 within this week. But I can lose all this money and I am okay with it. I've made peace. So what they do maximum leverage when umefanya 1:1 unlimited. But I will show you when you can flip an account. Ndakuonesha hizi vitu zote. I will show you ukitaka kuflip. Ukitaka kutokea $100 to flip mpaka 500, I will show you. Why don't I do it? It's not sustainable. It's too stressful. Imagine kila time una deposit amount unachoma na deposit unachoma. It's too stressful. Yes, so I will show you, and I'll show you rather kufanya hivyo si rather ununue funded account we trade tu na conservatively. You make a percentage, 5%, 10%. Instead of kujaribu kuweka pesa mingi na over leveraging, then you're going to gain some very bad habits in the market that when you go to funded accounts or big accounts, because you cannot flip a $100,000 account the way you can flip $100. You know that? However, flip a $100,000 account. Before you do that, a lot of stress is going to be on you. Okay?
Okay.
So let's go to types of Forex orders. Okay? What you like, so orders zenye tunaweka kwa market na nitakuonesha hapo kwa market saa hii practically. So you normally have market orders and pending orders. So let's go to the chart. I show you something. So when you come here and you want to execute in this market, what do? So let's say you go to tools and you want to execute new order. This is MT5. There is something here that you're going to see, the order type. And that's what we are checking in here on types of orders. On types of orders. We have a buy, we have a sell order, we have a market order, pending order, buy limit, buy stop, sell limit, sell stop. So when you come to the execution platform and you have this area here, the symbol or the asset you want to execute is up here. The type of the execution, this is when they tell you market execution, it means you are executing at the price which the broker is quoting to you at that moment. But let's say that ulikuwa umeona gold kipanda ukasema nataka gold ikifika hii green zone itasell. Lakini sitaki ifike hapo mimi ni execute. Nataka ifike execute automatically. So what you're going to do, you normally set your short position maybe at that green zone. You're going to put in your stop loss and you're going to put in maybe your take profit down there. That when the market gets here, I want it to trigger me automatically in the market. I don't want to be the one to tell it to buy or to sell. This is a strategy mostly used by people who are swinging the market. And they have put alerts in the market on areas where they want to buy and sell. And they want the market to execute them, whether they are looking at the charts or they are not looking at the charts. That is what it means. Okay?
Does it really happen? Because I tried and
no, it happens. It happens.
It jumped my trade.
No, it cannot jump your trade. It just depends. What did you instruct it to do? Now, when the market is going up here, we normally have a sell limit, buy limit, sell limit, sell stop, or buy stop.
I did a buy stop and sell stop, and it jumped.
Now, now let me tell you how a sell stop works and how a buy limit works. So in this instant, I want to know if you understand that topic. When I put in a sell there, what type of limit have I put in? Is it a sell limit or a sell stop?
When you do what?
When I put in this sell with this limit here, that the market, when the market gets here, it sells. Is it a sell?
That is a sell,
Is it a sell limit or a sell stop?
sell limit.
The sell limit. What if price is buying and I want to use this as when the market gets here to continue buying along with the buy? What is this? Is it a buy limit or a buy stop?
Buy stop.
Good. So I don't know why your broker did not execute you at that level.
It jumped,
yes.
Right? It jumped my trade and then took it out.
And then took it out. I would like to see practically what happened so that I decipher and know, was it because there were fundamentals? And then
there was fundamental.
If there was fundamentals, it means there was something called slippage. When you see the market jump your order, it means there is slippage in the market. Okay? They normally slippage means I will execute you at a price that is undesirable for you. You wanted me to execute you at 23.15, but I'm going to execute you at 23.20 up here. Okay?
But what it did, you didn't understand. What it did, it took my trade, right? Very late.
So it executed you?
And then it closed it.
Why did it close? Was it a margin call, or was it because you had a stop loss, or you had another buy limit?
I had a stop loss very far back. Like it was like
you had a stop loss somewhere like there. This is around 52 pips, yes, and you entered somewhere like here.
Yeah.
So what happens? Was it a buy limit or a sell limit, or both?
It was both.
That means it went to your stop loss. It executed you and went to your stop loss.
Listen, it did not. Can you do a buy limit and sell limit? Let me see.
Buy limit and?
I mean, sorry, buy stop and sell stop, sorry.
Okay. So which example? Do we use the same example here? So this is a sell limit. Okay?
Okay.
Yes.
A sell stop, you mean?
So if I was to put a sell stop.
Sorry, a buy stop, you mean?
Okay. So if I'm to put a buy stop, it means that I will have my execution there, my stop loss below there, and my take profit may be headed to the direction which the market is moving to. Yeah, so it's a sell stop and a buy, a sell limit and a buy stop. Those two.
But what I did is I gave it a gap between sell stop and buy stop, nearly a gap at 20 pips.
So you executed both of them?
No, one.
I don't think I really understand what you did, but which one now which one was triggered first?
Okay, you need what entries at the same place. Mimi, I didn't put entries at the same place, nilizipatia gap.
So ilikuwa hivyo kitu kama hiyo. Kitu kama hiyo.
Yes. So you see there's a gap, right?
Yes.
So when there's news or maybe there's the high volatility, it's supposed to take either buy stop if it is buying, or maybe sell stop if it is selling, right?
Yes.
So what it did, there was a gap for market.
Yes.
It jumped and then took my trade and then closed it. My nini was very far.
Your stop losses were far?
Yeah, 20 pips.
Okay. I'd want to see what your broker did there. Okay, but I cannot explain that phenomenon because it is not within what the buy limit and sell limit and sell stop is.
I was trying to do this strategy, Najita Swado, like Swado.
I know it. Yeah, Swado strategy. It's called straddle strategy.
Yeah, Swado. Yeah, that's what I was
jamaa fulani hapo mnaijani namjua. Na hiyo kitu imekuwa for a very long time na haifanyangi. It doesn't work. No,
okay, I saw another guy doing it. He's white. I saw another guy doing it. He's white.
It's pure luck.
It works, but they said but they say it's different brokers. Some brokers don't allow.
Ata pro firms allow. Ata pro firms huwezi fanya hivyo.
Allow what?
You cannot do a strategy in a prop firm.
Okay.
Yeah, you can't even do it. So I wouldn't even think about doing that kind of a strategy. Hata singeshughulika. Hiyo achana nayo. Okay, doing buy limit and sell limit are only for swing traders who are trading higher time frames. Okay, it's more maybe you're executing in 1 hour. I'm gonna show you all that when we are swinging some moves in the market. But for now, I just wanted us to know if you're well versed with the buy limit and sell limit, and I can see that you're well versed with them. Okay. Yes. Yeah. So anyway, when you're talking, we're gonna go through some demo accounts. I would want you to open a demo account. I don't know which broker you're going to use, but if I was recommend to you to open a broker, I'd want you to open with Pepperstone. Okay.
Pepperstone, I tried.
Yes.
I tried 2 accounts.
A demo account.
Yeah.
Okay.
I'll try to see if they can still give me back.
Okay.
Because well, in Pigia, I tried to do everything. I don't know what happened.
It's fine.
What
we're going to do is, if you have any challenges with it, I'm gonna take you through the process to have a demo account, because that is what we're gonna use first to try everything that we do, to go through all those. Sometimes we're gonna share and all that. Okay. Yes. So anyway, there's an area where I know you are mostly interested in about getting wealthy in this business, and I know it's very possible.
Definitely.
I know that this is where you're headed, and this is where I want to take you to. But all traders no, I'm saying, but in terms of time, how long do you want to do that? Because I don't want to give you the wrong impression. Mi siko hapa kuhype Mariana ama kumdanganya ama nini. No, I just want to give you the realistic side of it. Yes.
Let me tell you. From now, I have until I'm supposed to resign, but I've not yet given the resignation letter. Yes. Because I'm still waiting for my company here to be fully
registered.
Yes, it has been registered, but there are some of the things I missed, and it needs to, my lawyer has to do that. So, najipatia until October. Yes. If it is very fast, or at most, in May, I will not be coming back to teach. I'm not even planning to renew my teacher's license. Yeah.
Okay, so you have from now till October.
From October, at worst until end of what is it called? End of April.
Any main reason why you don't want, why you're not teaching, why you don't want to go through with your job before you get stable in Forex?
It's taking much of my time.
I know it is, but it's a sacrifice.
Yeah, but I'm not thinking about it. Let me tell you, I've been thinking about resigning for a long time. What is keeping me there? It's not even about the salary, it's about the visa.
Okay.
Yeah, my salary too is important, and it's a young 1 to 3, but I think I could make that in a day.
Okay. In other businesses.
In all my businesses. I think if I concentrate, I would be making that much. Okay. Because let's say at worst, how much do they pay me? Let's say $1,500, which is very small for me. And tell me I can't make $1,500 a day.
Okay. You can.
In trading.
No, you can.
Exactly.
Yeah. That's fine. So, but meaning by September we will be through with our fast with all the anything pertaining to trading. We'll be through with it. Okay. You'll know how to do so many things in 3 months. Okay. And then after that, now it will all be practical and trading for the rest of the year. Okay. So by that time, you're the one who is gonna gauge by the profits you're making. It's not even about me to tell you that you're good in trading, because there are things you're gonna see me do, and you're gonna try to do them, and it will not be your time yet. Okay? The way you see me stacking trades and putting trades, I have even tried to tell some of my students, can you do it? And they have said, let me use the lot size calculator. Because at some point, you'll have to have all these lots in your head. Na trade gold. So gold nikifanya hivi, nikiwa na stop loss ya 10, nafaa kufanya aje. It will all be in your head. The reason I'm not able to do all that is because all these assets are in my head. Nikienda kwa gold na nikiweka 1 lot. I know I'm risking 10. So if I have a stop loss of 10, it means that every position is 100. So if every position is 100 and I want to risk 500, I will have 5, 10. Or I'll have 10, 5. Are you getting my point? That's how I trade. Mm-hmm. Yes. So kana nikiweka hiyo 1 ama 10, I already have the calculation in my head. I have 5 pips stop loss. I'm supposed to risk $500 or $1,000. If I put this lot size, this is the much I'm gonna lose. So if I split it in all these positions, I'm mitigating my risk, and I'm gonna make this money or lose this money. But risk management is key. Okay. Let's finish with the class. So I know you might have gone through this, but it is good to notice and to note that all Forex traders, all of them, they lose money. They lose money. I showed you a trade I lost in the morning and I recovered it and still made a %. It depends how you treat your losers and how mature you are to manage your losers. Another thing is that trading Forex is not for the unemployed, those on low incomes, or are in deep knee credit debt, or who can't afford to pay their electricity bill or afford to eat. This business is a business that can crash you head to toe. I have seen it crash many people. I told you we started so many people, and I have seen them shed off. Many of my friends wanajaribu kurudi. When I tell them how much I charge, hawaamini kwa sababu walikuwa marafiki wangu. I have been a loner for a very long time because Forex trading itakunyang'anya marafiki. If kama unataka kuona kama hii ni biashara itakuletea marafiki wengi, you are very wrong. I'll be very honest with you. It's going to shed off a lot of your friends.
And why is that?
It's because you will find yourself that the more you're making money, the more you want to be on the screens. The more you want to be more disciplined. The more it will become a business for you. Ukiangalia nini yangu, schedule yangu Mariana, uliona ni nini naweza hapa kwa hiyo time. Ebu angalia schedule yangu. What do you think I can put there?
Do you follow your schedule?
I follow my schedule.
Okay.
Ebu niambie ni nini nyingine naweza ongezea hapo. Wewe uliona nini nyingine naweza ongezea? What other time can I have? Can I go out on Dunda? Nope.
Okay, basically after I don't have friends, I need to work at.
So basically
after I was
all the friends that I used to go out with, I no longer go out with them for the last 3 years. I haven't gone out with any friend.
Mm-hmm.
You'll have to make a choice. Do you want to make money or to make friends? That is up to you to decide.
I want money, definitely.
It's not a get rich quick scheme. And I thank God that you are a business woman who is astute and you are very ambitious. But in this business, you're going to treat it a bit more different than the rest of your businesses. Okay?
So let me ask you,
yes.
In a month, how much can you lose and how much can you get?
It depends on the account which you have.
Okay, let's say I have 100,000, the way I have 100 accounts.
Yes. So how much money can you make in a month? If you're good, if you're good at your if you are good at your business, you can make from 6 to 10%.
Okay.
Yes, that's the most realistic. I'm gonna give you the ile inaitwa nini? Worst case scenario. 5%.
Okay.
Yes. Worst case scenario, 5%. That's how much money you can make in a month.
Okay.
Consistently, without breaking sweat.
Without like
over risking, over leveraging, vitu mbaya mbaya yani bila kukua aggressive na market. Ile unasema I will only take high quality trades only.
Okay.
Yes, because the more you interact with the market, the more you can lose. Okay. So
do you advise somebody to make a certain % in a day they shouldn't trade again?
No. And I will tell you why. Because I have had both sides of the nini. Let me give you an example to answer your question. So let's say you had an anticipation that this market would sell. I want to show you something. Sema ulikuwa unataka kusell hapa. Uliona maybe kulikuwa na reason kwa nini ulikuwa unataka kusell, si ndio? lakini market ikakuja ikachapa stop loss yako hapa, si ndio? There are two types of traders. Ule mwenye atasema nilikuwa nimesema leo nitarisk 1% na ni hivyo, nimegongwa na nimesahau hiyo story, si ndio? Kuna huyo trader. Kuna mimi mwenye anarudingi kwa drawing board, najiuliza, Kevo, ni nini ulimiss? What did you miss? Why did you lose? Everything was aligning. So I will start analyzing the market again from a higher time frame. And then now I will make a decision to do what? To buy again. Niseme, sasa hii market nimeona kwa nini na buy. Ime kwa more confirmation the market is going to another level up there. So I will say, wacha ni buy hapo, niweke stop loss yangu hapo na nifanye nini? Na niende juu. Now, two things can happen. I make profit, or I do what? Or I lose. Now, what I will tell you is, I normally have a maximum drawdown kama hiyo tu ya funds. Nitasema, hii session nikiingia, I can take a maximum of 3 trades, each 0.5 risk, meaning that that session I can lose only 1.5%, or with 1% risk, I can take 2 trades. Nimekujibu? So I have a maximum number of trades I'm to take, or trade ideas, and a maximum number of percentage to lose in a day or in a session. So the maximum I can lose in a session is 2%. Now that 2% can be divided into very many trades. Are you getting my point? If I go with low lot sizes, I can take like 5 trades to lose that 2%. If I go with high lot sizes, it reduces the number of trades I'm to take. For instance, if I'm in a consolidation, I will risk 0.5 around 4 times. If I am in a trending market, I will risk 1% 2 times to lose 2% in that session. Tumeelewana hapo?
Yes.
So, but I don't have at you lose trade moja ama nini. It depends. What size was that loss? Was it a big loss? Was it a small loss? Depending on where we are in the market. Kama market ukiangalia saizi kwa consolidation, watu wengi wanafikiri na trend kwa consolidation. You go to time frames like 4 hour, you're going to see those things. That your market haiko kwa trending market. All this is a consolidation kwa gold. Hii ni consolidation. Iko na imbalance na consolidation. Okay?
Okay.
Yes. So we will practice and practice until you become good at what you do. And we're not going to practice with real money. I'm not going to tell you, Mariana, I have $100 to risk. Apana. I want you to go get a good demo account here, $50,000 or $100,000. Then we can be able to take it up pole pole. Okay? Yes. So I hope that class was interactive for you. I hope you have learned a few things. I don't know if you have any questions so far.
It seems our class is very hard to be 1 hour, so maybe we can do more.
It will be 1 hour. It will be 1 hour. Hata ni vile sometimes in extend, lakini it will be strictly 1 hour as we move on. Kwa sababu kama saizi, if I look at my time, naona ni 15:30, it's 8:30. Okay?
Yeah.
Yeah, it's just a moment.